Good morning.
Good morning from Illinois.
How did
Hopefully
you
our
find the
weather's
link?
good.
I just went on my phone and just pushed Morning Edge and it came on.
Okay.
It's
We the old link expired and I didn't realize it until about 3 minutes ago.
oh
So I posted it. I sent a new email and I posted it up. So
yeah, that's the same one I use. I mean, it came right through around maybe
okay.
7:28 or 30.
Okay. Cool. Well, hopefully we'll get other people jumping in. So let's get rolling.
All right. Hopefully everyone will jump in here as they get. There's David. All right. Well, looks like we're having a little down day today. Markets, remain headline driven and mostly on tariff news. So there's news came out, issues between the U.S. and China on tariffs, and then we had last week the steel. Trump was going to put 50% on steel, so the steel companies are bumping today. We'll look at those charts. Also, we had, I think, Ukraine bombed a bunch of airports or air bases in Russia and destroyed planes. That's what the report was, bombers and stuff. So you're seeing oil go up today. It always goes. It's up about 4.4%. When you have conflict, oil goes up, and then our U.S. Treasury 10 years up just a tad at 4.44%. Today's Monday, June 2nd. So welcome to June. This is the final month of the second quarter. So be an interesting month. Last week, the PCE was out. That's the Fed's favorite inflation figure. It was up 0.1% month over month and 2.5% year over year. That was in line with expectations. This Friday, we have non-farm payroll reports that come out. That's going to be the big thing everyone's waiting for. And also we have ISM
Over here.
manufacturing service. We have the unemployment rate, and we also have consumer credit coming out this week. So a lot of economic news on top of the tariff news that happens, minutely. And then we have earnings. Broadcom will be earnings, CrowdStrike, Hewlett Packard, Lululemon, Dollar Tree are just some of the big ones. We're getting towards the end of earnings season because we're actually getting towards the end of the second quarter. So these earnings are from the first quarter. So we're almost done, but get ready to start on the new ones. Let's take a look at, let me take this down and put this up. When I was doing the screeners this week, I had just a ton of stocks that are just up bouncing on their intermediate resistance level. And then I had a ton of stocks that were bouncing off of their intermediate support level, and there are few in between. And you can go on, I got back later yesterday, I was on a trip, but I went in and I put in, basically we have the momentum stock. Let me get to it here. Hold on, here we go. Momentum stocks you can go look at, and then under the 200 stocks. So the charts are on the Discord under charts of interest. You can go see what we put in. Now today the stock markets, look to open lower. So just be careful you don't jump in on these, because this is based on past information. So this is where it's at. I didn't find anything that I really liked just for a watch list that came off straight off my trading guidelines. So I'm going to wait and see if anything develops during the week. But right now, there's nothing in there, other than the momentums that we found, and then the under the 200s that I put up here too. So that's where I'm at on that. Let me come off of this and drop that and bring this up. Get it to come up. Here we go. So when we look at the S&P 500, we're still above the 200. Okay, we're going sideways. We did bounce down on it at one time 4 or 5 days ago. And we come back up, and we're just running right along the 9. The 9's moving sideways. We got a Bollinger Band moving sideways right along the intermediate resistance level. Again, here we've seen this sideways. We've been talking about it for, a week or two. We're still above the 200. The momentum and oscillators have flattened out. So again, kind of a chart of indecision on the SPY. The Dow is under the 200. Okay, this is 30 stocks, 30 of the largest stocks. We've managed to get above it, for about 3 days, but the 200 is running right along resistance. That's just a tough level to get by. You can see we're going to open up just a little bit lower than we closed today. I'm starting to see a little roll on the oscillators like we were last Friday. The Qs, again, Qs are playing right along resistance level, sideways. We're going to open up just a little lower, but we haven't really been able to pop over that. Again, oscillators in the Bollinger Bands are converging, just sideways movement. Nothing really to pop this, one way or the other. One thing that looks a little bit like it might go up a little bit today is gold. Gold's been going right along resistance and kind of in a sporadic way. It's just kind of all over the place. But looks like we're going to open up above resistance, but we've done this before. So again, we've got sideways parallel Bollinger Bands. Okay, we've got oscillators down. So, just watch out. It's one day. Gold bounces with the market. Market's up one day, gold's down, in the opposite. Okay. Come on. Well, here's Bitcoin. So Bitcoin actually got up above its all-time high for a couple of days and fought it, the resistance of that. And now we're down below the 9 for the last 5 days. We're fighting right on this level. It used to be support, and then was the upper resistance level. You can go back. So we'll see if Bitcoin can pass that and get above the 9. But the oscillators aren't giving us much hope on that right now. But 4 days of sideways on Bitcoin. But again, the patterns on Bitcoin have been pretty normal when you talk about, looking at gold, how gold is all over. And then back in the day when we looked at SPY and the indices that were kind of, the market structure was broken. So this has remained pretty much, a semi-sane pattern, as far as not bouncing around and gapping up and gapping down on Bitcoin. MicroStrategy again. You'd have been trading MicroStrategy, you'd gotten out, at the resistance. Now it's under the 9, it's back under resistance. So you're really playing between the Bollinger Band as the low end, and you're looking at resistance at the top. So again, sideways on MicroStrategy. Starting to see a little bit of a roll back up, not there yet on MicroStrategy. NVIDIA just playing right along resistance again. It did pop up after earnings, had a nice pop, then came back down right to resistance. Really didn't do much on the oscillators, just kind of sideways. So again, so it's returning back to the mean. Basically, we'll see what happens. But again, this resistance level is hard to get past. It did come up to almost where the sell levels were, which is where they still are. So we could see some playing in this zone here, as long as we stay above resistance and we stay above this 9. But again, it's not showing me any momentum or strength as far as wanting to pop up any further. What else we got? Meta. And we're just seeing the same thing, sideways movement. Okay. Again, looking at the patterns of all these stocks, and like I said, only 48% of the S&P 500 are currently trading above their 200-day moving average. Meta happens to be one of them, but it's come up to resistance. We're seeing these Bollinger Bands, just sideways patterns. So again, we need a little more volatility in swing trading to get us, get us some movement and momentum. And I'm not seeing it in a lot, other than our few momentum stocks and a few in the under the 200s that are on the list that we just went over. Google's right at the 200, right at the resistance level. We've seen this on a couple of charts. Okay, we had some run up on it a little bit, but still nothing. You're looking at the oscillators coming down a little bit. Apple's had a hard time with tariffs in China, and they're way under the 200 and way under resistance. You can see they're just kind of trending down, sitting right on basically the intermediate support level. So underneath the 9, underneath the 50, underneath the 20, Apple's really having a little tough time right now. We'll go over to Netflix. Netflix again. Here's where we're going to open. Sideways pattern again. We're a little bit above the 9. We'll see what happens. The upper Bollinger Bands where the sell orders are on Netflix. Again, oscillators are starting to trend down. Nothing here to excite me on these Mag 7s for sure right now. And then Palantir. You know, a lot of guys are in Palantir. We had this nice run up here, and then it just hit into resistance, and we've basically been going sideways since then. We're going to open up below resistance. Seeing a little bit of the Bollinger pop up a little bit. That's because of that big candle, and we still aren't above the MACD yet. So again, sideways, 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 hitting resistance levels. You know, on the big stocks that we've been looking at. And there's a reason for this. You can go back into the indexes and look at the sectors. Okay, XLC. This is communication sector. You can see this as sideways. Okay, right along resistance. We look at. 8 out of 11 sectors look like these charts right here. Get it to come up. You know, resistance sideways. So 8 out of the 11 sectors, and then the other sectors don't look much better. They actually are below XLF. XLF financials sideways. Looks like the 9's starting to pop down. Looking at the oscillators popping down, and this is why you're seeing sideways on the big indices, especially the S&P, because that's what these are made up of. XLU came up, that resistance down below, just sideways. XLK, okay, up resistance right below the sell order level, back down. Now we're back down below the 9. When you see this 9 come up, hits this resistance level, you know, and then you start seeing the price action go down. We're above the 200 on the XLK. This is technology, but again, sideways to a little bit weak when you're looking at the oscillators. So then you look XLI, industrials, same thing. I mean, it's as I'm going through these, I'm just seeing chart after chart looking like this on the big, you know, indices and on the sectors, you know, and within them you can find some nuggets like we found in the momentum stocks and under the 200, but without the volatility, you know, moving sideways, we're just not seeing any setups yet that meet my trading guidelines. So let's look at some steel because these guys are going to take off today. So this is Steel Dynamics, which was doing really crappy. And then today it's going to open right here. So that's going to be quite a big gap on Steel Dynamics. So be careful not to chase these right away, right out of the gate, because there's a lot of room to come down. Here's Cleveland Cliffs. Just absolutely been decimated. Came down to support. Today we're going to open right here, from here to here. So again, the news is driving a lot of the momentum. NUE, Nucor. Okay, again, it's just like steel came down. We're going to open here, right? We came down, and the steel came down on all these just to support, and it's going sideways. And with the news, and only the news that came out, that's what made these start, you know, it's going to gap up on all these stocks that we're looking at now. Let's see what started this. This was U.S. Steel when they came out with that Nippon deal. And, you know, here's where the announcement came out. But what happened? It came right up and it hit its intermediate resistance level. And it's not popping up like you're seeing the other steel companies because it's found resistance. And it's been resistance for about 4 days. And we're going to open up actually, last time I looked, a little bit lower than resistance. So U.S. Steel has run its course for a little bit now, but it could pop up on the news today. But right now it doesn't look like. A couple other things. You're going to look at oil with the conflict we're seeing, China, Taiwan, and Ukraine. There's ExxonMobil. It's been just right on the flat line, right on support. It's going to open up right here at about the 9 today because of what's happening in the world. ConocoPhillips. Okay, again, going down. Again, I saw a lot of these that are just riding the intermediate support level, just like we just looked at the ones that are riding the resistance level. Again, this is going to open up right at about the 9. Okay, so you can watch these. If they start rising up above that, they'll go on the under 200 list. We can get above that 9, and we can get some confirmation on the oscillators down here. CVX, just do a couple more. CVX again, come down, it's riding support. It's going to open up above the 9 a little bit today. So CVX. Other thing we've been looking at, United Health, we've been watching. United Health looks to open up a little bit higher, just right here. It looks higher, a couple, $3, but we've been right along this support. And we're still under the 9 a little bit. It looks like we're going to open a little bit above the 9. I want to see this go this way and then the 9 start to move up. We've already seen the MACD kind of cross here, but we've been watching this for a potential swing under the 200. We still have downward trending 50s and 20s, but this is the kind of stock we're looking at for a setup. It's just not there yet, okay, for me, according to my trading guidelines, but it certainly has provided us with potential, for a pretty good swing up, but I'm just not seeing it yet. So that's what I got, and I did that pretty good for a Monday, Trent. So I'm going to turn it over to you.
All right. So talk a little bit about volatility and why Mark is not seeing a lot of great setups. Volatility is more in the neutral state. Gamma is, meaning that market makers are basically hedging out their books and suppressing volatility. And so we can see that over here. This is the SPX gamma volatility throttle versus 10-day realized volatility. Basically, what you want to know is if we're in the green, volatility is going to be more suppressed. So if you're a swing trader or a day trader, your volatility is not going to be as great. When it's in this red area out here, that's when volatility expands. That's when you get more opportunities from a short-term basis. The gamma level, which is at a neutral point, as long as we sit above 5,850 or so, we are more in a neutral state and a more bullish environment. If we go below that, you're going to see a negative gamma event, and that means the volatility is going to expand again, and that's where you're going to get the VIX price movement. So let's take a look at the VIX real quick here. And okay. Bring this up. All right. So this is our bucket list. We're right now, the VIX is sitting at pre-market 1952. It's really sitting on this baseline between 19 chop bucket and investable bucket. And it's pretty tight. So we should anticipate volatility is going to be suppressed and not that active. One new chart I want to show you all is the 3-month VIX average. And this gives us an idea when you look at it from a 90-day period of time. Volatility is on a 3-month average is declining. So that's typically more investable kind of environment. So more suppressed volatility. As you can see here, back on April 7th, that area of volatility hit as high as on a 3-month average, not on a daily average, 3-month average, was up around 45. And that's where you had that big drawdown in the S&P and tech stocks and equities in general. It subsided, and today we're sitting at right now at 2138. So we're more in that investable bucket. The volatility that from a short-term standpoint, is going to be suppressed unless something comes out. But when you look at it on an average 3-month period of time, anticipate volatility is going to be suppressed. So if you're looking for short-term like day trades, the volatility is not going to be there as much. When it comes to swing trades, your swing trades may actually take longer to manifest to where your exit point is. So take that into account as well. An area I want to touch on, I did a TikTok video on it this weekend, was the bond market. And there was a CNBC news story that came out that basically said that it had Warren Buffett's picture there, and they said investors are following Warren in a sense of where they're putting their money when it comes to treasuries. And it's more in the short term treasury market. So this is a 3-month US Treasury. Right now I have 4.3, 4.348%. And so as long as we see this continue to go down, that means the value of these 3-month US Treasury bonds are going up. When you look at a 1-year, similar situation, 2-year, it starts to turn. What this is telling us is that the market, the investor, the institutional world, the global world doesn't have as much confidence in the US paying back its debt past 2 years. And we start to see that with yields starting to move up in there. When we look at the 5, similar situation, 10-year, similar situation. We've come down to 4.438% on the 10-year today. And that may be a jumping point to have these longer term US Treasury bonds go higher, which means the value of those bonds go lower. So if you're running a traditional 60-40 investment portfolio for the long term, you're basically getting cornered into a bad place. And that is your long-term bonds aren't working as well. Your equities are sort of stagnant in a way. They're trading in a neutral position, whereas historically they've worked opposite of each other in a normal market environment. 20-year, same thing, we're seeing it going up, and the 30-year, same thing going up. We talked about Japan for the last couple of weeks as well. Their 40-year has dropped, their yield has dropped from at a high of 3.695% to today we're right at 3%. So there's interest in long-term Japanese government bonds, and this could be a trade. You can see here this big chunk of green here. This is where buyers have been in the past. This may be a support level, and this may have been just purely a short-term bond trade in the 40-year government bond. So it doesn't mean Japan's out of the woods, doesn't mean this, that, and the other. It means more of it's moving towards, it could be a short-term trade for the Japanese 40-year government bond. I think when I look at bonds, that to me, and we've talked about this, a longer-term economic perspective, the world doesn't necessarily believe the United States has the capability of getting out of its debt situation and really fixing it on a longer term basis. And that's why they're exiting the 30, the 10, the 20, the 5, and they're going more short term. They think, well, yeah, chances are the US government can pay back those treasury bonds in a 1-year period of time, but anything beyond that, a little skeptical until the House the US government gets their financial things in order. We're going to stay short term, and I think that's why you're seeing Buffett hold short term debt. You're seeing more corporation or institutional investors doing the same thing. So keep that in mind. But I think overall, as an equity environment for the week, we should anticipate probably a 3% standard deviation in the S&P 500. So standard deviation for those who don't know, if you have your baseline of the S&P, you should anticipate a 3% upside potential or 3% downside potential in it. So a really suppressed kind of range to anticipate. And as long as volatility stays suppressed, anticipate less volatility, less short-term trading opportunities, and on your swing trades, probably more of a lengthy hold period to get to where you would typically exit. So keep that in mind. That's what we're seeing in the options market and the bond market today.
Grant,
What's
we can't
that?
hear you. We can't hear you. There's like a casino playing behind you.
There is?
At least I thought that was. Okay, you're right. You're good.
Have you
That's
heard anything I said?
That's his
It's over
casino.
there.
He's running a casino back there. That's what's going on.
Yeah, I don't know. It's gone now.
Good.
Sorry.
Oh, okay. Okay.
Yeah,
But did you
Mark's
catch
got
any of that?
something going on over there. I hear you just fine.
Oh, okay.
I'm getting old. My hearing's going down. Go
It's all
ahead.
those loud old cars you've been around all weekend.
But it's more the exhaust.
Yeah, right.
Must be
All
the
right, so that's what
carbon.
I got. Let's open it up to the floor. Patrick, you got any news from over the weekend from the
Yeah,
European side of
there
things?
was Keir Starmer, the Prime Minister, announced today that they're going to open multiple armory factories throughout England. And a stock known as Babcock International, I think, has gone up 6% today, BAB. I also noticed, I read an article in the Financial Times by Torsten Slok, chief economist at Apollo, and he suggests that US government credit default swap spreads, which reflects the cost of protecting a loan against default. They're trading at levels similar to Greece and Italy at the moment.
Absolutely, they are. Yep.
Yeah. That's
And
I mean
think
that
there's
is
there's a lot of fear in that market right now. And there's a lot of not only that, Patrick, the derivatives market too, that people don't even understand or know how much betting and gambling has gone on every trade. They bet on those trades, and that can go out several trades. And once the dominoes fall, that's what happened, a little bit during the great financial crisis also.
Yeah. Mark, I'd like you to look at a stock called Curiosity Stream. It's worth looking at. There seemed to be some significant momentum over the last month on it.
What's your symbol?
CURI.
C
U.
U R I.
Romeo, I for India.
Okay. Okay. Let's take a look. CURI. It's got kind of a low volume, but you can see down here, if you look right here as I move across.
Yeah, they're not.
Yeah. It's come up. You've got a good run up here. Unfortunately, we're hitting some resistance. We're seeing a little rollover. So from a swing trading point of view, this isn't where I'd get in, but from a fundamental point of view, I don't know anything about this company. Maybe Patrick, you know a little more about it.
It's a streaming service, a US streaming service. It's been in competition with Netflix and all the other main competitors.
Okay. I wanted to look at, since you're up, seems to be your stock. So I was thinking you. So we came up, we hit resistance. We've been kind of sideways, just like everything else we've been seeing, Patrick, and we'll see if it can get popped up. But, here that 9 came up right along your resistance level and then started coming down and it's dragging the price down a little bit too. So we'll see what happens. Oscillators are looking kind of weak too. So anyway, this was a really good run when you brought this up to us. We're gonna move it over. You brought it up to us back here when it was in the 19s. And now it's trading at 25. So that was a good $600 up on your pick.
Take a look at VFF. This is basically a dollar stock, but the volume is pretty hefty. It's in the $1 million range. It's looking like it's going to open about 125, $1.25 today. I don't know how I came across it, but it looked very interesting to me in that it's sitting at your green line of death, but today it looks like it's going to open higher. And it looks like if it could get past $1.30, you could probably get a little higher bump in it, but right. I see more of like $1.56 as the top end of it, potential for it. So it could be a potential trade.
Watch this little symbol up here. It says issuer failed to meet NASDAQ continued listing requirements. So is this a NASDAQ stock?
I don't know.
Must be. And because it's so low in price, probably because of down here, they're probably on a listing issue right now. So just be careful.
Yeah. I think I I think I picked this off of Felix and Friends the
Oh,
other day.
I was gone all weekend. I didn't get to go to Felix, so
Yeah, I just saw something briefly. I think it was him or something came across, and when I looked at it, I was like, okay, is this a accumulation phase it was in, that kind of thing. So
you gotta be careful. The smaller stocks that gets a lot, they get a lot of the day trader traffic in there that can mess
oh
up
yeah.
so if you're day trading it, those are great stocks to have, but I'd like to see a little more volume, from a day trader point of view, in the millions of shares for sure.
Yeah, I've got today or yes on Friday I traded around 1.19 million shares.
Yeah.
So but historically average it's below a million.
Or my poor little Berkshire still rolling down just below the 9. So look at these Bollinger Bands just collapsing, sideways movement. So, but we're seeing a little rollover down here. So again, like you, United Health, I'm just watching this one to see, when it turns and if it's a possible swing trade for that also. So, Bob, what do you got? Anything? Oh, he's left. Didn't see him. I didn't know. Payman, what are you up to? Anything
Not much.
good?
I like your Carvana. I looked at your
Oh, okay.
list and I really like Carvana. I'm thinking of purchasing some for swing trading.
It's momentum stock. So what I like is it's not way above the upper Bollinger Band. So you've got your downside risk is to the 9, your upside risk is, up to your Bollinger Band, and you got some sell orders at 338. So
And the
that's
volume is up, I think, too. No, I
well,
forgot.
volume was 4.4 on Friday, 2 million on Thursday, 3.5. So it's about, where it is.
Yeah.
But it's a nice run. But I like these that go between the 9 and the Bollinger Band. Even if they are momentum, I do like those. And so try to get. I think I had someone talk to me on the Discord and wanted to know, on entry prices. If I was looking at this to get in, and I'm not,
Uh-huh.
I would I always try to hit a buy closer to where the support is. See where it came down here and hit support, and then didn't close under
Your
it.
graph isn't showing, Mark.
Oh, it's not. I'm sorry,
Your
guys.
graph's not showing.
I'm sorry, guys. I thought it was. Okay, now this will make more sense now as I speak with a chart.
Okay.
I like the way it stays between the 9 support and the Bollinger Band. Okay, so
Sure.
and it's in an upward trend, and you've got the trending up 20, you got the trending up 50, you got the trending up 200, you've got some sells right up here, which is right at the top of the Bollinger Band, about 338.54. When I get in, if I was going to get into something like this, I'd try to catch a little bit of a sale. Like on this day, you try to catch when it's down below. So I try to put in a buy. I look back and maybe right at this level here, where it opened before, and see if I can catch it, or maybe a
Okay.
little bit up. Today's a down day starting out. We'll see what happens in the market. I don't like to trade in the first 30 minutes because of especially on a Monday, because all the orders are sitting there, market makers are going through them. But you got, just look at it this way. You closed up here, you opened here. This will be your support level. Okay, so that's your risk to the downside. And this is your support level on the top, the resistance. This is your gain on the upside. So you try to help yourself out by giving yourself a better cost basis, to give you a higher gain as this keeps moving up.
All over. Yes, we do that.
So hopefully that helps. And good luck if you get in.
Take a look at INDA. This is the iShares India ETF. It looks as though I see it's building a sort of the accumulation phase, and it looks to open up not much bigger than where it's at, but at 54.34 today. But just the sort of, you go back a little bit further, a year, you can see sort of a resistance support potential being formed there. If we could, a breakout what above your 55.16 could be a move higher. So Nothing really sexy, but
Yeah. I'm gonna need to see this oscillator, the MACD, kind of crossover positive as a kind of a confirmation for me. It's,
yeah,
yeah,
but
but it's over
something
the
to take a
200.
look at.
So, it actually made it over the 200 and fought it a couple times and won. So that's interesting.
Yeah. Um, who is it? Was it somebody asked about Palantir? I think you mentioned that earlier.
I did.
Yeah.
Volunteer hit up on the resistance on the 14th and has been below it since. Now, I think Trump came out and mentioned that the government's using Palantir for something last Friday, and I was on the road, but I caught up on some news, but it still wasn't able to hit, and bounce it above that resistance yet. So, we're going to need something to pound this above that resistance and the sell orders, which are really close to get this to move. But it's been, sideways for 1, 2, 3, 4, 5, several days, 2 weeks.
yeah.
Just like we saw on every other thing, every other stock, for the most part, majority of stocks, 48% of the S&P, are trading, above the 200, so 52% are below. Anyway,
Yeah. Yeah. I think if you look at I sent out in the newsletter this morning about the market breadth and the percentage of stocks below or above the 20, the 50, and the 200, and the 20 is showing more of a downward trend overall. And then as you get into the 50, you start to see it's sort of stagnated, and then 200 percentage of stocks trading above the 200 has started to decline again. It's at 39.97 this morning. So it's
okay.
starting to decline a bit, which is not really favorable uh, to stocks going up. So um, something to keep in mind as well.
Good morning. How did you sleep?
Finally.
There we go. We don't
Here we
need to
go.
our sleep patterns.
I watched
So,
some of Felix and Friends,
yeah.
Yeah.
and it's very interesting. One video I watched was on RR, which is a robotics company. You could see some of their products, in airports, and it's basically things that make ice creams, or robots that make cappuccino, stuff like that. It's really if you look them up, they have some pretty cool videos on their products. And basically what he points out is that it's like the thing of the future. It's like it's in a narrative big time. So he likes to play these, he likes to just grab this thing crazy low, and and he draws graphs and so forth, entry points and exits and support. But he looks at this one as like it's going to, come back down, you get it at a certain level and you swing it back up, just because it's in the narrative and there's a lot of volume. So it's
He
interesting.
uses he uses the black pools as a indicator as well. He did that with I forget the stock. I watched a couple of his videos as well, Paul, and I thought that was interesting. I have access to some of that data, but it really gave an insight to like who's accumulating, especially around earnings, or certain events. It's just a matter of sorting out and finding it, the information of when these guys are accumulating big chunks of it. But it shows how powerful institutions are when it comes to investing, is when they decide to put a couple $1 billion behind a company, there's something going on. So yeah. But I thought his information was interesting. I learned something.
Oh my goodness. You can teach an old dog new tricks. Huh?
I know. You're the old dog, dude. I'm not.
Oh yeah, older than
I'm
you.
still
So it was interesting. I took a car trip. We had 450 cars that had to be 30 years of age or older. So a lot of muscle cars, and we went 600 miles in 2 days and through hundreds of towns, and people lined up, and was interesting as just observations going through, and I was probably one of the youngest in the whole car deal. It's just cars that do not seem to attract, especially vintage cars, younger people. And I was mentioning to some of the members there that, in 5 to 10 years, there won't be any drivers left of these cars, because there's just no interest in it. But as we traveled around and we went to different restaurants and stuff, I didn't see that many young people out in that economy of restaurants and places that at least we went. And I don't know if that's a different interest or they don't have the money to go out and do the things that maybe the older generation has. But it was an interesting feel just on the economy that, looking at it from that point of view. Mr. Bob up in New Jersey, what are you doing?
Not much. Laying low.
Okay.
Take a look at this.
I mean,
company.
here's the thing. Did you guys see what happened at the end of the day with the markets? Based on what Jamie Dimon did, or what he said, that the
I
bond
did.
market, which we all know the bond market has cracks in it, but they're not doing anything to shore it up. And he's not going to get excited when it falls apart, and when the bond market falls apart, the equity market's going to fall apart, right? So, I just found it interesting how everybody just reversed in a heartbeat the direction because Jamie came out and made that statement. It's not new news. This has been going on, right? But everybody's just waiting for the shoe to drop.
Yeah,
I think
go ahead.
Historically, when I've gotten really pessimistic, it always works against me. And I wonder this pessimism that, like, for instance, Jamie Dimon is sharing and the bond market, the U.S. debt, is there a need to look at it more from a contrarian standpoint and say, okay, when things get super negative, is most likely things going to move higher, or vice versa. When everything is so optimistic, and we've seen that with last year in the S&P and the year before, 20+% ups, everybody was super optimistic. Well, what happens? The market goes down. And I'm wondering if that's the state we're in from a short to intermediate term, not a long-term perspective.
Well, I kind of ask myself, on a regular basis, what's keeping me in this market, based upon the headwinds. And really, the only thing that's keeping me in the market is the positivity coming out of the Trump administration. And I've seen a little positivity in my business, but it's nothing to take to the bank. So that's what's keeping me in the market. But when Jamie comes out and says those things, and he's done it in the past and nothing's happened, it wakes me up, right? I guess it wakes everybody up.
Yeah.
I think you
because that's his business, right?
It is his business. And
right.
I saw him on Morning with Maria this morning. I caught a little bit. They make just under $1 billion a day, JP Morgan.
That's crazy. That's a crazy number, right?
I think he's probably one of the best executives of all executives around. And when you think about, he was talking about the Fed and how the Fed's behind, and I was thinking, well, Jamie Dimon's kind of in control of the Fed because the Fed is not a government agency. It's run by banks, and he's the biggest bank.
Hey, baby.
So I'd imagine that he has the biggest share in that bank. So,
and they're in a good financial position, right?
And she started talking to him about crypto, and he doesn't like Bitcoin. He came out.
Never has.
But his bank now will handle. Can you shut that down a little bit, Trent?
Yeah, I got it.
So his bank now will allow customers to hold Bitcoin there, and so he knows there's money there because he sees what Larry Fink's doing over at BlackRock and how much money he's making. Yeah. And on top of it, they're talking about she talked about stable coins, and he says, "Oh, by the way, you know, we have a JP Morgan coin and we use that coin to move money, you know, quick and easy without cost, you know, between banks and stuff. So he's in it. He just won't admit it.
Yeah,
You
he's
know,
been
he's
in
in
it.
it.
He's
in it
been
to
in
win.
it. They just do it indirectly.
Yeah, he knows there's money in it, and he's going to be right in the middle because he can't afford to lose out, you know, to Larry Fink.
This
You know,
has to do with regulation, right? The regulation is lightening up now because of
Yep.
Trump. Before with Biden, you know, it was different angle. They were against, you know, crypto. But that's my thing right now. I'm just trying to figure out is everybody sitting in because of, you know, the Trump scenario, or are we looking at, you know, technicals? If we start looking at the technical part, it's not too good, right?
Right.
well, I mean, the technicals tell us what the market's doing based on past data. Okay, so what the technicals have been telling me, Bob, is there's a lot of indecision, and I think indecision
That's
comes
my
from
point.
yeah.
Right.
You look at the financial news, and it's all bad news, and then you look out and what's happening. You're like, well, some of the stuff I see is actually good. You know,
Yeah, but it's not enough to look forward, right? Because we're always
Right.
looking down the road. Today is today, right? In business, it doesn't matter what you did for me yesterday. It's about what you're doing for me today, right? And then you're looking down the road. Where are you going?
I think it's interesting that all of a sudden the financial media and the news they're all really worried about the deficit and the debt, but they weren't 4 years ago or 3 years ago or 2 years ago as we kept passing continuing resolutions that did nothing but increase the debt. That was
Right,
fine.
right. Which we're going to do again,
And we are, but now they're
right?
making a big deal of it, you know, which is
Right. But did
yeah,
you hear he's going to pay down? He's paying down the debt already with the tariffs, $81 billion, I think.
right. You know, and everything that this administration does is fought, you know, by the judicial branch now, among other things, and that previous administrations didn't have. Okay.
Yeah,
Um,
that's my piece for the day.
well, that's a pretty good piece. You're not even in black today, so I can tell you're lightening up a little bit on your mood. It's
He's a
normally
little
you're
bit
black.
neutral.
Yeah, it's in neutral.
When he shows up with a lime green t-shirt, you know he's bullish.
That'll be the day.
Right. I was
Scott,
just looking at the bond ETFs and IEF, which is the 7 to 10 year.
yeah.
Here, I'll share it with you.
Okay.
Interesting. If you can see here, it closed out yesterday or on Friday at 94.57. Today it looks like to open up at 93.97, which is a pretty substantial move down in a bond, right? And I'm
Mhm.
wondering, looking at that, I'm like, that's IEF, that's a 7 to 10 year US Treasury ETF. And this is TLT, similar scenario, down roughly a buck in pre-market. And it's that whole, and understand the ETFs are representing the price of the bond. Whereas when you look at the treasury yield, you're looking at the yield. So they're teeter-totter. They move up, they move opposite of each other. And I'm looking at this, I'm like, well, that's a pretty sizable drop for a bond fund. What is that telling us as we go into the start of this week, if there's a sizable amount? Because last week there was a enormous amount of money, I think it was just over $1 trillion, flowed in to TLT and IEF combined. So a lot of money moved into those ETFs. Now you're looking at pre-markets moving out. What is that? Is that an indicator of some sort, you know?
Well, I think we talked about last week that, you know, the bond market is a big sophisticated market, you know, pension funds and governments and sovereigns, and they see risk in the long term. If I'm going to lend Trent $100,000 for 30 years, and I think Trent's shady and he's not going to be able to pay me back, I'm going to have a higher rate of yield on that to make it worth my risk. And I think that's
Yeah.
what they're seeing. But it's not only in the U.S., it's in Japan, it's all over. You know that the money risk because of the debt of all nations in the world, and then you look at the debt just of the U.S. consumer. I think it hit an all-time high again just last week.
Mhm.
You know, there's just a lot of debt, and the only way that we can get rid of this debt, we're not going to be able to pay it back. I'm just talking from a U.S. percentage. We can't tax our way out of it. There's not enough tax dollars. Even if we taxed everyone 100%, we wouldn't be able to pay this debt off. And now you've got, interest rates rising, basically the 10-year, and that's, what do we got? $6 trillion we're supposed to pay off before the end of this quarter or refinance.
It's just under 5, but you're
Oh, it's okay.
close.
We're
Well,
good. It's only
well,
5. It's
So
only
Mark,
5.
Mark,
Jeez.
they are taxing us. The tariffs are taxing the American people to some extent. Not 100% of it, but there is I would say 50% of that tariff is weighted on the American people.
But they're only, the way I look at it, Bob, they're only taxing me if I buy the stuff that they have. I don't need half that crap that they're,
Well, most people, that's you, but most people, they like things. They like stuff,
well, I
right?
like stuff. I like stuff too, but I'm not
I
going to
don't.
overpay for it.
I don't like stuff. I mean, I like cars, I like things like that, but I don't like stuff. But that's what they're paying for. There's a lot of stuff that comes out of China that people
Right.
buy, right?
So, but people won't be able to afford to buy them. Okay, let's just say they do pass
Well,
it. A lot of companies are,
I think that exists today.
yeah, because you look at the debt that the consumer is in, and they're stretched out on their credit cards, they're stretched out on their car payments, stretched out on their mortgages. Um, they're paying for their food with buy now, pay later. Uh,
Yeah.
that worries me, Bob, in the long run. When you
Yeah.
talk about being in the market, I wonder
Yeah.
when that's going to break, when all that hits.
Yeah.
And I think it's when people start losing their jobs.
Here's what was a very big indicator pre-financial crisis, and that was we mentioned it earlier. The bond insurance. What is it? CLOs?
CLOs.
Or CLOs. That the premium on those
Yeah.
starting in 2005, 2006 started to escalate, and you're seeing
Took a
that
couple of
happening
years.
again.
It took a couple of years.
It took a couple of years, but we're back at that levels again in those. And if I can find the chart, I'll show it. I'll put it up on the Discord, but also I'll have it tomorrow. But it shows this chart where we're back in that mode of we're paying more for that insurance against bonds, if it's corporate or mortgage-backed securities or collateralized debt, that kind of stuff, credit card debt, that kind of thing. That to me is a big indicator of how institutions feel about risk. And I think that is something to definitely keep an eye on. It's not that complicated. You insure your home in case it burns down or a hurricane hits it. It's the same way with these guys do with bonds, is they buy these insurance policies or CLOs, and there's a couple of different ones, but CLOs is, I think, the big insurance one. But something just to look up and take a look at. It's a leading indicator of how institutions and smart money is really looking at this market. So
I was talking to a friend of mine yesterday. His mom lives down in Naples, and sounds like a pretty nice house and everything. And his dad just passed away, so he spends a lot of time down there with his mom. And we were talking about insurance because I was telling him, I have to redo my roof, my siding, and as you know, the insurance down there is hard to get. You do too, Trent, and he said a lot of people, because they can't get it, have to self-insure, which I don't know how they're doing it unless they have a bunch of money sitting around. But that's pretty bad, when you can't, especially in the Naples area.
On credit.
Yeah, exactly. So
because they have these firms now out there that'll do your roof and they'll put it on credit.
To redo the roof?
Yeah.
Wow. Well,
I mean, think about
I
it.
know that
They,
mine,
they
my
put a
whole
lien on your
damage.
house for the credit.
Yeah, because my damage here will be well into six figures to fix,
Yeah.
put that on a credit. Wow.
Yeah.
So, I mean, it's,
Sorry.
those are the kind of things also, that, just the cost of everything and the ability to even insure something anymore. Look at your car insurance too. You know, it's, it worried
Insurance is
that
hard.
worries me. And that worries me, Bob, about the markets is just how long the consumer can remain, as they call it, resilient.
So they talk about that there's a lot of equity in homes today. Okay, that homeowners have a high amount of equity in their homes. However, no one talks about who the owners of those homes, the ages of those owners are. And majority of them are baby boomers that have multiple homes and they have the equity in these homes. But I don't think that exists with the millennials or the Gen Zs.
So I don't think so either, Bob.
Right.
I don't think a lot of those guys can even get into the homes right now.
Oh yeah. I mean, $500,000 house is starting today.
Well, yeah, I was talking to my friends
No.
on this trip, and I said, if you had to buy your house now, could you afford it? And most of them were like, no, I couldn't afford, with the mortgage rates and how high the price the homes are now,
Mhm.
combined with property taxes and insurance, I don't know if I could afford to buy it, at that
Right.
at
So
that
could
cost.
that reset?
Right.
Right? It has to reset.
Hmm.
So the question
And
is,
that's,
Yeah.
when
and
does it
we
reset?
used to have recessions, and that's what used to reset that was recessions.
Right. Well, we are in a recession. No one wants to admit it.
Yeah, that's true. Anyway, go ahead, Trent. You got something up there?
Yeah, so we were talking about CLOs. It's actually credit default swaps, CDSs are an
Okay.
abbreviation for it. But this is the price of a 1-year credit default swap on US government debt in basis points. So if this is where we're at today, or in the last month or so, this is where we were in '08, or beginning of '08, '09, 2010. This is where we were. I think this is during 22, this big peak. But you can see we're on this move again in insuring US government debt from default. This is from the sources the LSEG, which I think you got to pay for this service, but I found this on X. And I thought this was interesting because this, once again, this is a unsure event. I'm not sure if you know if the government can pay this back over the next, in this case, 12 months. So take that, it's something to dig into. They're called credit default swaps. And it's basically an insurance policy on bond markets. And so you can look at European credit default swaps, Japanese credit default swaps, corporate mortgage-backed securities and stuff. And this could be a sort of that leading indicator. And it's something that I think a Ray Dalio kind of takes a look at a
Well,
lot as
this was a
well.
big thing during the great financial crisis. If you go back and watch The Big Short, they talked about this. So go look at your chart there at 2008 and see where it was. Look where
Yeah,
we are today.
yeah. But right back, we're almost right back to it. But it doesn't, it not, it doesn't, I think they've become more popular in recently because of that, the great financial crisis. They weren't always used. That wasn't a big popular tool back then, but only a handful of institutions and individuals, Michael Burry being sort of the subject of that, the Big Short in a big way. He was one of the leading thinkers behind it. So, but as I said, I think, what the option market is telling us in the short term this week is that it's very neutral. And once we see if we see an event or something in combination with all these other things. I think this is how you build your macro framework to and process to figure out how to invest both from a long-term perspective, but a short-term as well. So, well, we're at 8:30. Been at
Market
it
is
for an
open.
hour. Market's open. So we'll call it there. I thank you all for participating. I will be sending out a new link for this call tomorrow morning. It will go on the Discord. I'm sorry about the confusion today. I didn't realize until 3 minutes before this started that the link expired because it only allows me to set it for 60 days. So I will be sending that out. So take a look at that. Also, from an administration standpoint, we're having some issues with the tell sheet and Kerry's watch list sheet when it comes to the financial health PDFs. I'm getting over the weekend, I got a handful of people saying they can't open it. So I'm going to have to go back in and figure those out and possibly do some reformatting. So please be patient on that. But I am out to fix that as well. So other than that, thank you again.
Yeah,
And you
thanks,
all have a
everyone.
good day.
Yeah.
We'll
Good one.
see you later.
Bye.
All right.
Bye.
Bye, guys.
Leave loud. See you.